Good afternoon, good morning, wherever you may be. This is Dennis Woburn with the Active Trend Traders. Welcome to the webinar on how to make money trading stocks. I want to welcome everybody from around the world because we do have folks that are plugged in from everywhere, including this guy here, Michael Bishop. Michael, welcome.
Hello.
And so, yeah, Michael was telling me that he's really being impacted by global warming right now because how cold is it over there in Austria right now?
Well, I'm in Switzerland, but it's pretty the same. It's around freezing temperature.
Ah, okay. So about zero. Is that 0 degrees centigrade?
Yeah,
Okay.
exactly. Which is quite normal, but what's not normal is that we don't have any snow.
So it may or may not be a white Christmas.
And it's almost impossible that we have white Christmas.
Okay.
Five days to go, and the weather forecast is very stable.
Yeah, I've got a friend who lives up in the mountains of Idaho, and he's dealing with about 3 feet of snow right now. This guy went to high school with him, and he turned into like a Grizzly Adams mountain man kind of guy. And he basically lives off the land and all that kind of stuff, but that's for another day. So all materials that we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. You know, I reiterate and I come back to that. The other stuff that's governmental requirements up here talks about trading options and just a basic disclaimer that, you know, when we test drives, you know, when we test, back test things and all that kind of stuff, back testing isn't necessarily an absolute indicator of how well a system will actually do, but it gives us a good idea of what we want to shoot for. But this aspect of paper trading, it's one of the things that I like, and this is not an advertisement for Thinkorswim or TD Ameritrade, but I really like their platform. For one, the flexibility it provides in entering trades, and secondly, I like their platform because they offer a live paper trading account when you open an account with them, and I think it's a real big benefit to be able to, especially when you're just starting out, is to paper trade both the system and the platform, because the platform, I mean, there's a lot of ins and outs in how to, you know, make it function, and it's a very good thing to be trading the platform, getting used to placing orders and that type of thing. And the paper trade system comes pretty close to matching their live system. At least they try to make it as real as possible. So here is Michael's disclaimer. And Michael, if you need to update this in any way, please send me a new email and we'll get this updated for you. Okay. So let's get going. Here's a little bit about who I am and where I've been. This is about 1989 when I first started trading, and then started educating myself in technical analysis and my affiliation with the Market Technicians Association, doing their baseline studies, which is a lot like a master's program in technical analysis, and various stuff that we've done along with that. Mike Traeger in Dallas, who's not with us today, does a lot of, you know, he and I combine on doing a lot of research together, and so that's about that. So let's get going. We've been having some training sessions, and I just got a real nice comment from one of our members talking about the training that we do on Wednesday night. This is one, if we were to be selling the individual training aspects, they would be going for about $50 to $75 for a half hour to 45 minutes worth of training, and that would be per week. And so combine the value of a premium membership at Active Trend Trading with all the educational materials. We have close to 100 educational videos now available for premium members, and the value of just that monthly 4 training sessions on Wednesday evenings, and then also the follow-on alert triggers when when I take a trade and that kind of stuff. Brings up the value for about $500 a month is what the true value of a monthly membership with active trend trading is. So this week, for those of you who are interested in strategy number 3, which is a wealth and income generating strategy, we will be talking about how to set up the foundation positions, which basically is the long leaps position, and we'll be talking about that on Wednesday night of this week. If you want more information, you can reach me down here at this email address. And so let's take a look at this week. We were all waiting. I was waiting definitely to see what was going to be transpiring with the Fed interest rate raise. Everybody was expecting it. The market did really well, kind of handled the news fairly well until Janet Yellen started talking. And as soon as she got off script and they started answering her questions, the market kind of went into a little bit of a drop. But I'm really pleased on how well it responded to that drop. Are we still, looking for potential additional pullback? Yes, we are. So the question is, interest rates going up. The market is too, question mark. And so the S&P is showing signs that it's topping. But that topping may only be for a short pullback. There is still a lot of optimism in the air with U.S. businesses concerning what's going to be taking place in a hopefully a lower regulatory environment, and with a quickening of the pace of the economy. So on the flip side of that, the NASDAQ is weakening faster than the other indexes. It already started a nice little pullback. It had made a new high, but we'll be taking a look at a chart on that here shortly. The Russell. The Russell is the small cap index along with the NYSE. The Russell, typically the small cap type stocks react poorly, or at least they mutes their advances a little bit when you get into a higher interest rate environment. But we'll have to wait and see on this. It appears right now that the path of least resistance on the Russell is down, at least for a pullback. And so takeaways for this week. One is the minimal response to the rate increase. It was priced into the market already, and so there was not a huge reaction, at least not yet. We have not had a huge reaction to the negative reaction to the downside like we had last December. And then I think, well, I'm going to bring it up here. I'm not going to, politicize it or anything like that. But this issue, the response to this so-called Russian hacking of, into the Democratic National Committee's sites, the Hillary, Hillary's emails, John Podesta's emails, and all that kind of stuff. I mean, that's going to all get figured out. But I think one of the things that could, whether this is made up or real, the reaction to it, the actions that is taken by the Obama administration prior to them leaving office may be kind of interesting and could be market moving if they, take a hawkish stance on this to retaliate against the Russians. And we'll have to wait and see on what's going to be transpiring from that. Michael, you had mentioned, what's the European reaction to the Fed raising the rates? Has there been any reaction over there whatsoever?
Well, it was expected to, so there was not that much. And what also was not a surprise, I think the week before Draghi has his speech,
yeah,
he basically said that they will going on with their QE.
Okay.
And I think basically the message was they keep on going, and maybe not that much as some hoped for, but longer. So I think that was a neutral play, everything together.
Okay. And you made some mention. The news over here in the U.S. is that basically the U.S. has done nothing regarding any type of sanctions or anything like that against the Russians. But you were telling me that some sanctions were put in place, and the people in Finland can't sell their fish to Russia and that kind of stuff.
Yeah, yeah. And also, yeah, definitely.
and
They just agreed to do it another 6 months, I think.
Yeah, but you made a comment that you think that some of these things that that the you made a comment that perhaps some of the sanctions that are being taken against Russia could be making Russia stronger.
Well, I think so. I mean, Russia has. So I have contact with a couple of Russian Sky there, and I think it's really a country where if you're inside, things looks different than outside, and they have a lot of clever IT guys and good universities,
Yeah.
And there are there are different companies working on banking systems, transaction systems, kind of PayPal for the Russian market, and based on blockchain technology and other stuff. And I mean, if you have kind of the attitude or that you have to do it yourself because the Western country could kind of block you,
Yeah.
then it makes you stronger and more innovative. And also, I think agriculture has been quite torn down and not invested much. To old people running the farms, etc. And what I have heard that is in the last years they boosted everything.
Wow.
It's maybe not the level like US or Canada or so, but it's definitely everything kind of getting more modern and better than the other way around.
Wow. And so, okay, well
And also, I mean, they are kind of forced to work closer together with China.
okay. Oh, okay. And so that's interesting. And that could spur a whole another conversation uh, regarding U.S.-Chinese relationships and U.S.-Russian relationship, and then what's going on through the rest of the.
I mean, that's a personal view, but I think at the end, or in the last 2 years, made Russia stronger and Europe weaker.
Wow.
And
Okay.
maybe US about the same, or yeah.
And so, okay, well, depending on who you talk to for the U.S., um, uh, some view as we have been made weaker also, and so
Yeah.
anyway, interesting times. So let's move on to, and I just shared a link with everybody. Dave just shot us a link, and I just wanted to share that with everybody. So you should see that in your answer box. For those who want to take a look at it. So stocks above the 20-day moving average, as Mike and I have indicated previously, that this is one of our like preliminary indicators that we utilize to see primarily when the market is significantly oversold. We're looking for this to be down below the 30 level. If it gets down between the 20 or lower, or 25 and lower, oftentimes it is predictive of a turnaround in the markets within, a 1 to 15 day time period. We don't per se utilize it for, we don't utilize it when it's up here towards the top, but we do pay attention to it. we pay attention to it from, this is a percentage of stocks above their 20-day moving average on the NYSE, and what we look for are things like, okay, um, are the, because the more stocks that are above their 20-day moving average and rallying gives up an indication of the internal strength of the market. So what we saw here is we saw the market come up, rallied up with the Trump rally, popped up above the 80% level, 80% of the stocks being above their 20-day moving average, and then it retreated. This was the pullback from a couple of weeks ago, and then it accelerated back up, and this is the acceleration back up. The bar chart over here is of the spiders, representing the S&P, and as we can see, as it pushed up and made these new highs on the NYSE, at least, not as many stocks were pushing back above their 80. In fact, they were falling off. And so we're getting a roll-off. So we had a little bit of negative divergence there that was kind of telling us that this may be, and I use that word loosely, as this may be at least an interim top or an interim pivot point, swing high, where in the future that will be will be telling us that I just read a comment, excuse me, is telling us that as on this last push up, the momentum wasn't quite as far behind or as much behind this push back up to the high side. Now it appears that we are in fact starting to sell off a little bit more today. We'll see what happens. Of course, we're waiting to trigger off of these, the move down into this area. Now, those of you who are early warning alert folks, I did put out a courtesy alert of potentially going into a inverse ETF. We're looking at TZA to the downside. That's the inverse 3-time leverage ETF for the Russell, and the other ETF that's looking kind of interesting right now is SQQQ, which is the inverse of the Qs. Basically, it's a 3 times leveraged inverse of the Qs, and I wouldn't be looking for more than somewhere between a 7 to 15% run on those individual entities. Yeah. So yeah, David, the Russell I put on to trigger that if it drops below the 1364 level, I want to be in the inverse, and it's holding. It's holding above that, and right there is where it's right around the cluster of the 820-day moving average. So that's all we've got on this today. So here's where the indexes were at about 9 o'clock this morning. That's Pacific Standard Time, where we're sitting with the active trend trading system. So let's take a look at some charts real quick. Okay, S&P. And excuse me, S&P. Here was the pullback from a couple of weeks ago, launched into another rapid move to the upside. And then basically over the last 3 days, since the Fed announcement, we've kind of gone sideways. It looks like it may be losing a little bit of momentum. Excuse me while I take a sip of water. There you go. Losing a little bit of momentum. However, this uptrend from that started right before the election is still intact. We are closing back in towards the 8-day moving average, and we're still well extended from the 20 and the 50-day moving average. What can we take away from the individual indicators is one is that the actual momentum indicator has basically started to go sideways, even as this was moving to new highs. It is in a negative divergence type area, and as we've rolled back over, the TSI now has, the speed, the fast TSI broke below the slow TSI, and typically when that happens, you'll be in line for at least a pullback. So we could draw a fib onto that on that last move up. Let's do that really quickly. From this swing low to the swing high over here. And as you can see, a healthy retracement would be down in here from the 382 down to the 618. That's approximately 1/3 to 2/3 retracement where we'd anticipate a bounce. If it gets down to that area, we'll be approaching the 20-day moving average, and we'll see if we get a little bit of a rebound off of that. What would be interesting to see is if we do continue to fall a little bit, we take out this support at the 2250 level and get into this area. Are we going to rebound? And that rebound may equate to the Santa Claus rally that tends to happen towards the final 2 weeks of the year, or definitely going into the last week of the year. Historically, the last week of the year, now a lot of the institutional guys have stopped trading and they're doing just a little bit of housekeeping to bring their accounts into line with how they're supposed to be lined up. But historically, the last week of the year, the indexes are tend to run up about 1.5%. I don't think it did it last year because we were a pretty good sell-off. So looking over here on the weekly real quick. The weekly is giving us some very interesting information. We have a shooting star in formation. That's it if basically price action does not move much from where it is right now, or it moves down a little bit. That'll be a shooting star for the week. And on the TSI and the momentum, as you can see, TSI, negative divergence. However, it has not rolled over yet. That's a very key point to keep in mind. Hasn't rolled over yet. So, while this may in fact reflect a top or a topping action put in a line of resistance, line of support, is that because this indicator has not rolled over yet and crossed, it's not giving us a clue that perhaps things are going to roll back to the downside. We saw that happen earlier this year. We came in here with a hanging man type of action, and then we get the cross about here. And then we went on for a nice little, quick little correction over about a month and a half period of time. Take a look over here on the momentum. The momentum appears to have run into a resistance from this last peak over here, and so we'll see what transpires next week if this turns over and rolls back down and runs back down below the zero line. When this indicator gets below the zero line, once it turns over and gets below the zero line, a lot of technical analysts consider that to be in a downtrend. So, Michael, you seeing anything here for the S&P?
Well, I agree. I would, yeah, I think the picture would indicate this, yeah.
Yeah.
What I was thinking, maybe it's now a good point to mention this, is kind of midterm where this could lead. And I mean, what we have is that the US market has been extremely strong.
Yes.
Dollar extremely strong.
Yes.
Europe and Japan markets have gone up as well in the since Trump.
Right.
But the currencies have been fallen like crazy. I mean, euro looks extremely weak.
Right.
And that's the one thing. And the other thing, there is definitely a high correlation between the world markets and the US, at least in the last 5 to 10 years.
Okay.
So I'd say if we get really a strong downtrend in the US, then the other markets will follow. Maybe
Okay.
not that much, but uh, they will follow. But if kind of maybe we have a sideways movement next year for the US, then it could easily be that the money flows into Japan and Europe
Okay.
because this, I mean, we have strong exporters. I mean, like Volkswagen, Mercedes, BMW, also the car industry, or in and the electronical industry, etc. And I mean, that's a huge advantage for them that the currencies have fallen.
Okay.
I mean Draghi tried since 5 years to bring the euro down, and he was not successful because Bernanke printed money like crazy, and Yellen followed him in this. But now the dollar got really stronger. Um, they could finally have what they desired.
And so, yeah. Now, Draghi is the head of the Europe. He's kind of like the Fed chairman, but for the
Yeah,
European Union, right?
exactly.
Okay. Yeah, I don't know. I don't know how many
With
people.
with the difference that I mean he's not only responsible to one government but 20 governments or
Wow.
so. That makes it more difficult.
Now, do you think the weakness in the euro is somewhat tied to Brexit?
Not really.
Okay.
No, I
Okay.
wouldn't.
Well, that's good. That's what I love about having you on the Friday webinar, because you bring a side that here in the U.S. we may not take into consideration, but I think it adds great additional value to what we're doing. So here's Nasdaq. Nasdaq is what I was talking about. See, it did break, in fact, to a new high. But now it's back down below that new, or close to back below that new high on a weekly chart. As we can see, the momentum has been waning, not really taken off like it's done on past moves. And what I'm looking at for this week is basically we got strong support, resistance up here at the 49.60 level. A little bit, pretty good support either at the 4,900 level, but I'm looking at this particular candlestick. It is a good bearish engulfing of the shooting star that happened yesterday. And so if that stays in effect, it may be time to nibble on that SQQQ with a stop loss just below, in the case of SQQ, it would be just below its swing low, like 50 cents or so, or you could even go to a 4 to 5% stop loss. That's what I'll be looking at a potential trade. That's if, as we get closer to the end of the day, this still remains a bearish engulfing pattern, then that would definitely be a potential trade going into next week, with the expectation, as I said, of a 7 to 15% run prior to the end of the year. I would take some profit off the table at 7%, and then make the rest of the trade on the whatever position was left. I would make that break even or 15%. So NASDAQ, as we can see, it is getting a nice turnover with the TSI almost breaking the fast, almost breaking the slow. As you can see, we have negative divergence on the momentum. Same thing, and we talked a little bit about this over here on the weekly chart. It's kind of a sideways slide with the momentum and the true strength index and the momentum. Take a real quick look at the comp, and I won't spend much time, not CINO, it's the comp. Just a similar type of reaction. Um, it followed up on Wednesday with what would be called a dark cloud, shooting star, bearish engulfing, and it's kind of a spinning top doji. And since the comp has a lot more stocks on it, that includes some of the financials and that type of thing, not just the technical, the, the tech stocks, it's worth taking a look at. What about the Russell? Okay, the Russell is basically doing that old, it's kind of a familiar dance, and we've seen this on a lot of different stocks here of late. It had this last run up from last week, pull back, and now it appears as if it's running back up, trying to get back to these old highs, but it ran into its resistance area earlier today and is now looking to be, looking like if it break down. If it gets back below this level, which is approximately 1364, I want to be in my my TZA trade with anticipation of it, and then I'd be looking at taking some profit off that TZA if RUT gets back down to the 1320 level. If it breaks that level, then we'll watch it from there. But this is basically a kind of a traditional or a very failure type of move where we push up to a new high, pull back a little bit, and then try to push back up to get back to this high, but there's just no momentum left. And so then we get the selling taking place and it's rolling over. I mean, if one wanted to, you could almost do the TZA trade based on that candle there today. What do we have on a weekly basis going on? We have one, as you can see, negative divergence. It looks like the TSI is starting to roll over and it hasn't crossed yet, so be aware of that, but it is rolling over. And then the momentum indicator, momentum running parallel for this week, even though we're selling off a little bit. And so, what are we, what's the potential here? The potential is, as I said, I'll pull back to about 1320 if this in fact does turn out to be a new swing high. So that's what I've got on the indexes, Michael. Let's take a real quick look while we're here. And we'll have a real quick...
Today for me the chart or the stock of the day is Yahoo. I mean, with this data breach, it tanked yesterday.
Yeah.
And today the first guys are stepping in to buy. I really ask myself, what the hell do you want to buy Yahoo now?
Oh, wow. Okay. That's a great question. I mean, it is at support of 38 bucks. However, as you can see, it blew through the 50-day moving average. It wasn't in an uptrend even then. Blew through, hit 38.25, which is about where support is, and getting a little bit of rebound. But it looks like some people step back in today, Michael, and they're having their hat handed to them later in the day.
Yeah.
So let's take a real quick another look here at NYA, which is the NYSE. If Dennis could type it in. There we go. Similar type of situation. We made it pushed up earlier this week to slightly new high, just by a little bit, and then is in the process of rolling over. The TSI on the daily chart has already rolled over. This large bearish candle, while it did not engulf the up part, so it's not technically a bearish engulfing pattern, it did engulf 1, 2, 3 days of past price action, and now we push back up to into the top of the wick here, holding at the 8-day moving average, and then we've got some support down here at 11,086. If that breaks, then we're probably going to revisit the 20, and then that could just add, provide a staircase to the downside to be watching for. And so, yeah, this is the index that everybody was kind of watching, and here's what I'm showing to you. Its high on this day was, this is past high from last year, 11,254, and we always actually made it up to 11,256, so about 2 points higher intraday or intra-week on that day, and that was on Tuesday prior to the Fed. Yeah, each of these are kind of, now that we've pushed back up, tried to get back up to the past highs, are looking a lot more like a potential short type of trade to the downside. Doesn't have to be, but, and I'm going to pop up really quick because I have promised that once a month we would provide a potential trade for everybody who comes on board. And here's TZA. This is what I was talking about. This is the 3 times inverse of the Russell. It found support at 19 this morning and has now popped back up to about 1950. The purple line there is the 8-day moving average, and that coincides approximately with the Russell dropping through that that 1634 level, I believe. And so again, if somebody wanted to gamble, and I don't recommend this, but this looks kind of interesting in that if that holds, and you're very, very close to a level of, about $1 away from, support at the swing low here. And on the weekly chart, as you can see, we've got some positive divergence going on both on the TSI and the momentum, but it hasn't made the turn back up yet, but it is way extended from its 8 and 20-day week moving average. The other one that I've been looking at is SQQQ. And I'll be looking at this as we go into the final hour when we do that presentation, guys. I'll be looking at this. If this, bullish engulfing holds up right now, it holds up into the end of the day, that may be worth at least a half a position. And with the expectations of where might it run from here, well, we can draw a line across here, and I hope you don't mind me going through this really quick just to kind of show you what we're looking at. We can draw a line. There's a level of resistance there. We can correspond that in with a swing high, swing low with a fib retracement from here to there. And as you can see, if this hold takes a position, what's a projected upside? Well, probably the 20-day moving average, which is about 1311 here, so that would provide a fairly quick turnaround from current position up to there. Would be about about 4% on this. If we make it all the way back up to the downtrending line, then you're looking at about an 8% move. So that's why I say somewhere, 5 to 7% on the first part of the move, and if we make it all the way back up to 14, which is not, which wouldn't be, that'd be about a 13% move. So that's what we're looking at as of right now. And since we don't have a really clear, well, we have a clearly defined trend on this, it's down on this side, that's why I'd be looking at only nibbling with a half a position, not a full position. So any questions on the market, folks? Michael, any questions?
No.
Okay, cool. So yeah, Michael, one of the things I'm trying to do here moving forward is each month to at least attempt to provide at least one potential trade, and that we would be doing with our premium members, but to make that available to everybody, I really want to be about providing value, even if you just tune in and invest an hour of your, or 45 minutes of your time once a week. I want to be able to share that information with folks at least, once a month at least. And so that's what that was about. So path of least resistance. Michael, what's your path of least resistance for today?
Well, for today, I'm curious if we have a little bit of an uptrend in the last hour, in the last 30
Okay.
minutes.
Well, I mean, when I say today, I mean looking forward over the next, week, 2 weeks, 3 weeks, month. So short term, you're looking for a bounce, possibly, but longer term.
Well, I'm looking for a downtrend,
Okay.
but and I think the Russell has just been gone too wide.
Yep. Too far, too
Or
fast.
so anyway, I mean, for a long-term investor, I would definitely not jump in right now. I mean, it has never been a good idea after how many years of bull market, depending how you
Well, I think it's
define it.
pushing 8.
The-
Yeah, it's
yeah,
pushing 8
yeah,
years.
yeah, yeah.
And so,
And I mean, we are overbought, but that doesn't mean that it can't go on.
yeah. And so in honor of Mike Traeger, since he's not here today, Mike would be sitting there basically saying, Mike is big time anticipating, some downside. He just doesn't know when. I mean,
Yeah, me too. So I'm absolutely, yeah.
and the thing about it is currently, and I won't call. I think that the path of least resistance is, to the downside over the next, 3 to 4 weeks. But, uh, let me caveat that in the form of a pullback. I think that we have to resolve this topping action to see how, we get a push back up into it. We have to remember that on a short-term basis, at least since the 1st of November, we have been in a uptrend. A very strong, overpowering uptrend that has gone up too far, too fast, and so it needs to either settle into some sideways movement to basically digest the gains. Um, but at the same time, I kind of land in this camp over here, not simply because, as you said, the facts of history are stacking up. 8 years in approximately 8 years in a fairly significant bull market. If I was a long-term investor, I would not be looking at getting long the market right here. I would be looking for a pullback. I would be looking at that that weekly chart to see how oversold it is. Is it rolling over? Is weakness starting to show up? And I would then keep my powder dry until we get into an oversold condition, which may take several weeks. And when I say several weeks, it may be 2, 3, 4 months. To see what's going to transpire from there. I don't know what's going to happen with the Fed going forward. The Fed has basically indicated that if the economy overheats too much with any type of stimulus that the new administration would be doing, that they would be quick to throw water on the flames and cool it off with higher interest rates. So anyway,
When is the next meeting?
I haven't looked at the new calendar yet,
Yeah,
but it won't be until next year. So here's
sure.
hey. So, and I can't remember if it's in January or February. They're about every 6 weeks.
Okay, I check in the meantime.
Okay, so here's where we're at, sitting with what's been booked so far this year. And we took a little bit of a drawdown, about 1.25 drawdown in November, from October to November, and then we're starting to tick back up into December. I'm about $8,000 away from meeting my objective of a $40,000 equity gain on the on the, we start each year with $100,000 of trading equity, and then we build from there. So monthly, we did our first of 2 webinars for the Bay Area Moneymakers. This past week we'll be doing the last one on the 29th of the month, and we'll be talking about what stocks in the IBD 50 did the best for the year. This coming Wednesday night, we'll be talking about how to set up that foundational position, strategy position for strategy number 3. And I'm working on, I'm continuing to work on some refinements to the early warning alert services. What we're doing with that is, because of the real quick reaction bounces we've had this year, Mike and I have had to go back in and say, okay, what added piece needs to be in the system so to be able to take advantage of those. We've found that. I'm working on the back testing on that right now, and it's turning out fairly well. Active trend trading enhancements, revise the traders report that comes out on Monday now, and then I'm trying to. I've done this twice this week. We're putting out these pre-market alerts and news information before the market, so that you'll be ready to trade first thing in the morning. Final hour trade setups on Fridays, and I'm getting really good comments back. Folks are liking that, seeing how to set up trades for the final part of the day. And so Rick says January 31st to February 1st of 2017 for the next FOMC, and then because we don't want to chase around looking for.
I checked. Yeah, that's kind of the short meeting, and in March there is a big one.
Okay.
With projections and press conference by the chair.
Oh, is that the one in Jackson Hole? I think it is.
Could be. So maybe. No. I think that's in summer, if I'm not totally wrong.
So, and then we've also added a good stable of leveraged ETFs that have good options, that have trade well over 1 million shares per day, and put those into our watch list that we're working off of, so that we don't have to spend all of our time looking for stocks to trade. So active trend trading, folks, is built off basically our motto of trying to clarify, simplify, and multiply. We utilize the 5 pillars of active trend trading: what to trade, when to enter, when to exit, what strategy we're going to use, and what to expect. I firmly believe that one is you have to build your strategies on top of your system. You have to have a sound system in order to then you generate your individual trade strategies off of that, but you're utilizing basically the same underlying rules to trigger you in and out of trades for each one of the strategies. One of the strategies that we've been quite successful with this year is strategy number 3, which is the wealth and income generation strategy. We just closed out a position in the SPY that we opened back on the first part of January 2016. It ended with a 34.39% gain. And what this is it's selling premium, weekly premium, against a long call and put leaps position. And so normally I don't show an invitation to join us for our membership, but through the end of the year we will be having an opportunity to join as a premium member and an early warning alert members for a reduced amount, $32.99 versus the $54.99 amount of a regular monthly membership. This is the piece up here that I was saying is worth about $500 a month. And so how to make money trading stocks, attendees go here, and actually all the membership links on the website through the end of December are linked to this special. And so with that, Michael, I'm going to call it a day because I've got to get ready for the final hour trading. But folks, see you next week. Have a great weekend. The Christmas holidays this year are just working out such. They're on Sundays. Both the Christmas and New Year's holiday this year is on Sunday. And so we'll be maintaining our regular schedule all the way through the end of the year. So the 21st, the 28th, or correction, the 23rd and 30th, we will have our webinar. I do now have a Twitter account, and you can find me at here. Please go by if you're a Twitter person and like to do tweets. Please go in here. At the beginning of the year, we're going to actually be sharing some trades through Twitter. And then here's a contact for me over here on the right-hand side. So with that, any last and final questions? I've showed you a couple of stocks and our ETFs that I'm looking, very strongly at for going into next week that are close to a level of support. And so, but everybody, please, please trade, your own system. And yes, this is recorded and is posted to the main page of the website, and it's typically up within 2 to 3 hours after we have the session, and you can then review that after the time period. So with that, Michael, thanks for joining us today. Your input was exceptionally valuable. Everybody else, thank you all for joining us. Okay.
Thanks for having me. Bye.
Bye-bye. Have a great weekend, and God bless everybody.